Let's talk about Aehr Test Systems, a company that's literally testing the AI chips powering this entire artificial intelligence revolution, and somehow they've been flying under the radar until now, because they just received a follow-on order from a major hyperscaler, and when you dig into what they actually do, it's like finding out who makes the quality control equipment for the gold rush. Everyone's focused on the miners, but somebody's got to make sure those nuggets are real, right? So let's break down what he actually does, because it's genuinely fascinating once you get past all the technical jargon. They make these systems called Sonoma test systems. These machines basically torture test AI processors before they go into production. We're talking about burn-in testing, which is essentially running these chips at extreme conditions to make sure they won't fail when they're sitting in some massive data center running ChatGPT or whatever the next big AI model is. The thing is, AI chips are insanely complex. We're talking billions of transistors packed into something the size of your thumbnail, and if even a tiny percentage of those fail, you've got a massive problem. Imagine if Google's AI servers started failing randomly. That's not just a bad day, that's potentially billions in losses and a PR nightmare. So these companies need someone to stress test every single chip, and that's where Aehr comes in. They've developed this really clever system where they can test these chips both at the wafer level, so before they're even cut into individual processors, and at the package level after they're assembled. Nobody else does both. It's like being the only company that can check your car both before and after it rolls off the assembly line. Actually, scratch that analogy. It's more complex than that. What they're doing is creating these custom modules with liquid cooling. Yeah, liquid cooling for testing equipment because these AI chips run so hot that can simulate years of use in just hours or days. They're basically time traveling these chips into the future to see if they'll survive. Now here's where it gets really interesting from an investment perspective. Aehr just announced they got follow-on orders from a major hyperscaler. And when they say hyperscaler, they're talking about the big boys. Amazon, Google, Microsoft, Meta, those kinds of companies. The ones building these massive AI data centers that are basically the infrastructure of the AI revolution. This unnamed hyperscaler ordered 6 more Sonoma systems, and these things aren't cheap. We're talking multi-million-dollar pieces of equipment here. But what's really telling is that it's a follow-on order. That means this customer already bought systems, used them, liked what they saw, and came back for more. In the semiconductor equipment world, that's huge. These companies don't just throw around purchase orders for fun. Every capital expenditure is scrutinized to death. So when they come back for seconds, it means Aehr's stuff is working and working well. The delivery timeline is aggressive too, 6 months for all these systems. That tells me 2 things. First, the customer needs them urgently, which suggests their AI chip production is ramping hard. Second, Aehr can actually deliver on that timeline, which means they've got their manufacturing figured out. This isn't some startup scrambling to fulfill orders. They've got the operational capacity to meet demand. We're potentially at the beginning of a multi-year AI infrastructure build-out. Every company on the planet is trying to figure out how to integrate AI into their business. Every startup is pitching themselves as AI-powered. Every data center is being upgraded to handle AI workloads. And all of that requires specialized chips. Not just any chips, but ones specifically designed for AI processing. These aren't your regular CPUs, they're specialized processors that can handle the massive parallel processing required for neural networks. NVIDIA's H100s, AMD's MI300s, Google's TPUs, Amazon's Trainium. Every major tech company is either building or buying these specialized AI accelerators. And here's the thing nobody really talks about. The failure rate on these cutting-edge chips is actually pretty high initially. When you're pushing the boundaries of what's physically possible with silicon, when you're cramming that many transistors into such a small space, when you're running at those power levels, stuff breaks. That's just physics. So testing becomes absolutely critical. You can't just hope these chips work, you need to know they work. And not just that they work on day one, but that they'll keep working when they're running 24/7 in a hot data center for years. That's what burn-in testing does. It weeds out the chips that would fail early in their life cycle without companies like Aehr, the entire AI infrastructure would be way less reliable. Actually, thinking about it more, Aehr is basically selling insurance to these hyperscalers. By catching defective chips early, they're preventing catastrophic failures down the line that could cost millions in downtime and repairs. Now let's talk about the elephant in the room. The short interest. We're talking about a significant percentage of the float being sold short, which means a lot of investors are betting against Aehr. But here's where it gets interesting. High short interest combined with positive catalysts is basically the recipe for a short squeeze. And we just got a pretty major positive catalyst with these follow-on orders. When shorts start covering, and they will if this momentum continues, it creates this feedback loop. Shorts buy to cover, price goes up, more shorts get nervous and cover, price goes up more. You get the idea. It's like a snowball rolling downhill, gathering more snow and momentum as it goes. I've seen this play out before with other stocks, and when it happens, it can be violent. We're not talking about gradual appreciation. We're talking about explosive moves that can happen in days or even hours. The thing is, I don't think the shorts fully appreciate what Aehr has going for it. They probably looked at it as just another semiconductor equipment company in a cyclical industry. But this isn't about regular semiconductors anymore. But AI isn't cyclical, at least not yet. It's in a massive growth phase that could last for years. Every earnings call from every tech company mentions AI dozens of times. The capital expenditure going into AI infrastructure is unprecedented, and Aehr is selling the picks and shovels to this gold rush. Looking forward, there are several catalysts that could really move this stock. First, any announcement about who this mysterious hyperscaler customer is would be huge. If it turns out to be someone like Google or Amazon, that's instant credibility. Second, additional orders from other hyperscalers, because where one goes, others often follow in this industry. These companies are all competing fiercely in AI, and if one is using Aehr's equipment to ensure chip quality, others might need to as well just to keep up. Third, any expansion into testing chips for other AI applications beyond data centers, edge AI, automotive AI, robotics, all of these need reliable chips too. Fourth, the actual earnings reports. If Aehr can show margin expansion from these high-value orders, that changes the whole valuation picture. The companies also mentioned they're the only ones offering both wafer-level and package-level burn-in for AI processors. That's a moat. That's defensibility. In the tech world, being the only one who can do something is incredibly valuable. It means pricing power. It means customer stickiness. It means competitors can't easily undercut you. And honestly, the timing couldn't be better. We're still in the early innings of the AI build-out. Jensen Huang from NVIDIA keeps talking about $1 trillion of data center infrastructure that needs to be upgraded for AI. If even a tiny fraction of that flows through to testing equipment, Aehr could see explosive growth. This isn't financial advice. Everything here is based on our own research and our perspective on where the AI testing market is headed. The semiconductor equipment sector can be volatile as hell, and there's always risks with smaller companies like this. But man, when you connect all the dots, the AI boom, the unique technology, the major customer wins, the potential short squeeze, it's hard not to get excited about where this could go. Do your own homework, obviously, but keep an eye on this one.